Maverick Traders, welcome out to your currency recap. It's October 27th. Corey here with you. We're always going to take you through what's meaningful news, what's on tap for this week. We've got a heavy slate of economic activity coming up. Plenty of things that should offer opportunity for trading. It's an ample opportunity week. This should have some fireworks to it. We're going to talk about potential FX pairs, cryptocurrency, anything that can make us money.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
So as we look at today, I would say that we're still in this risk-on environment. You're going to see that in the FX pairs, what's working and what's not. Improved risk appetite. Some are saying, look, there's optimism about trade. U.S.-China, they're in negotiations. The expectation is that China steps back on their rare earth restrictions as the U.S. either cancels or delays tariffs. There's just positives trickling through that tend to lead you to believe that essentially it's a risk-on environment. So FX, like equities, stocks have been performing quite nicely. We know gold has been booming, which is, kind of counterintuitive, and it's backed off lately. Well, Aussie and Kiwi are risk-on currencies, and they continue to be the outperformers. Aussie today up just over 0.5%. The underperformers, all the defensives, Japanese yen, US dollar, Swiss franc. So we continue to be in that environment. Now, like I talked about, gold just really got exhausted. It was such a big run. It had been on an absolute tear. So for it to back off here for the past few sessions, perfectly reasonable. It needs to consolidate a little longer. But equities have picked up the baton and they're running with it. The S&P up another 1.2% today. Very strong price action. Crypto overall flat, as was oil. If you look at Bitcoin Cash, all of these cryptocurrencies, less than 1% moves across the board. That's a very sideways market. So crypto surged a little bit this weekend, but really leveled off today. As you look at the S&P 500, this is that really strong move. We've been expecting that essentially you're going to get this exhaustive kind of parabolic curvature to it. And so you go from a more sustainable trend to a more extreme trend and more elevated. That's what the parabolic curve is. It kind of goes away from the normalized trend. If we were to look at how far we are extended from the moving averages, we're getting a little more extended than previous. And that makes sense if you're going through a big exhaustion type of breakout. So if we were to throw a channel line along the top, you might drag it something like this, and this could be argued may even be a channel breakout. Again, you tend to get fireworks, and so I think of it like putting a big exclamation point at the end of this run. The S&P 500 has been on fire really since the April tariff scare. So markets freaked out in April and they've been ramming higher. We're now into late October and shows no signs of stopping. Well, that's about the time when everything possibly that could go right has gone right. You've got the short squeeze in effect. This is pain for anyone short, anyone that's been a pessimist, been a bearish person on equities and expecting the stock market to turn. They are in pain, and so the infliction of pain is really what happens at the end of this. The reason it goes vertical is not only because people lose their minds and buy at extreme prices. It's primarily the short, it's the pain trade. So think of it like somebody getting their arm squeezed until they yell uncle, right? And so if somebody's sitting there twisting your arm, eventually you're going to say uncle, and that's where the short sellers are right now. So very, very strong environment and kind of a blow off top scenario playing out. Look at this calendar. About as strong a week as you can find for trading opportunities. You've got the Bank of Canada Wednesday morning, expected to cut rates by 25 basis points. You've got the Federal Reserve here in the US, expected to cut rates by 25 basis points. That one comes out at 2 p.m. Eastern Time, 12 p.m. Mountain. You've got the Bank of Japan overnight, so that's late Wednesday into Thursday morning. They're expected to keep rates unchanged, and you've got the ECB on Thursday morning, also expected to keep rates unchanged. So, four major central bank meetings. The US and Canada expected to cut rates by 25 basis points, the others supposed to be on hold. As we look at velocity, there are some candidates. It's still a risk on environment, and you want to continue to really go until the music stops, so to speak. So anything inside of -1 to +1, we're not that interested in, but we would very much be interested in shorting Japanese yen and going long either the Aussie or the Kiwi against it. So what are you trading? You're trading Aussie yen to the upside or Kiwi yen to the upside, and those are your potential candidates. So let's look at each one of these, right? These would be buy. You'd buy the pair to take advantage. Buying opportunities, let's take a look at the charts. So your possible trades, starting with the Aussie. This is broken out. Here you can see the consolidation, the nice breakout, the everything in place. Buy signal, upward sloping moving averages, upward trending RSIs overall. Just looks like Aussie wants to continue to climb higher. If we flip to the Kiwi, the New Zealand dollar chart, not a whole lot different. Maybe a little more subdued, maybe not quite as strong as the Australian dollar, but this one's still very much intact. You can drag your trend line, we're still above it, continuing to upward climb. We're on a buy signal. Pardon me, we're on a little bit of a sell signal, but an upward sloping moving average, upward trending RSI that might just be breaking out to higher levels. And so you'd want to see this flip, you'd want to see this turn into a buy. I would say that the one that's actionable right now is more Aussie. Kiwi is right in lockstep, but maybe not quite there. As far as what you'd short against either one of those would be the Japanese yen as the obvious candidate. On a sell signal, downward sloping, downward trending, all the characteristics you want to see for further downside price action. And we could finally say, from a pattern perspective, maybe a little low base forming that we might be breaking down out of. Not unlike this low base back here that you can see it broke out of to the downside and away we went. So consolidations really speak to a resting phase. It's the pause that refreshes. We refresh after we consolidate and away we go again. So still a risk on environment. You're looking at buying things like Aussie Kiwi. My preference right now would certainly be to buy Aussie, and then short yen would be the obvious trade. If you're looking for secondary candidates, watch for the British pound or the Swiss franc, either of those pairs, to join on the more bearish side of things. So sometimes, Japanese yen, you've got the Bank of Japan meeting. If you wanted to branch out and look at the British pound or Swiss franc or something like that, that would be reasonable as well. Hope you enjoyed the currency recap. Have a great week, everyone. We'll see you next time.